What is up, everyone? It's Doc on the charts, and today I want to talk to you about backtesting. I'm about to go to backtest a new strategy myself, so I decided that it's a great time to actually remake this video on how to properly backtest. Um, so I'm just going to do a quick 3-slide presentation. I didn't make it pretty. I made it straight and to the point. Just because I think backtesting is extremely simple and extremely easy to understand. Yet so many traders try to rush into the live markets, randomly buy and sell, lose money, randomly try to figure out and gamble on the markets, but refuse to do the study and do the legwork to actually get themselves mastering the skill. Yes, backtesting is boring. Yes, backtesting is repetitive. It's not fun, but it's necessary. It's just like when you're going to school to get your PhD, to get your MD, get your undergrad degree, there's homework that's involved in mastering and refining your skill. And backtesting is one of those pieces of homework that we have to do as traders to make sure that we understand how our strategy works, whether or not it's a good strategy for us, understand the statistics and all those different things. So let's go through these quick slides really quick. So the first thing is, what is backtesting? Backtesting has basically 3 important pieces to it. It's essentially you just studying the market using old data. So the thing is, the trading only has 2 variables: the price that the instrument is at and what time it is during that time when the market's open. Now, you can't fast forward time, you can't rewind time. However, most data brokerages like TradingView, MetaTrader 4 has all the previous candles from the previous 2 hours, days, weeks, and months. And so we can use that old data, those old candles, to kind of figure out if we were applying a strategy to those old candles, would the strategy actually work? So backtesting means that we're looking at old data. We don't care about what's printing right now, looking at old data and trying to use that to kind of give us an idea of what our strategy would do. The second thing is that it's a way to practice using hindsight. So how do you know your strategy works if you've never done it? It'll be a very ineffective way to practice your strategy by having to wait to trade a whole 30 days. You're wasting an entire month to see whether or not the trading strategy works. The easiest way to do that is to look at old data, look at a month's worth of old data, go back, apply your strategy, and see whether or not it worked in that previous month. If it didn't work in that previous month or it's hard for you to apply, likely that strategy doesn't work and it doesn't work for you. The last thing is that it's just important to practice in general. The more reps you get in, the better you're going to get at it. Just like exercise, just like sports, just like playing an instrument, the more practice you do, the better you get at it. And back testing allows you to go back through and get a lot of practice where you can look at several days worth of trading price action and a single day, where usually you can only go through in real time one trading day's worth of information a day because that's how much is printed. Time waits for no man. So it's important for us to practice, get the reps in, especially as beginner traders. The more reps we get in, the better we get at this, the faster we get at it by just going through more and more practice. The next thing is, why is backtesting important? First thing is, it helps you practice your strategies, as I said in the previous slide. Say, for example, you wanted to try the new smart money concept or want to try ICT silver bullet technique or try a basic break and retest strategy. See whether or not it works on gold or US 30 or NAS 100. You won't know until you actually try it. So it's a good time to go back and practice strategies like I'm going to do today. I'm going to practice a new strategy that I saw. It seemed very interesting. So I want to see how does it work in my own hands, with my own eyes, looking at the markets and seeing whether or not it works with me. The other thing is that it helps sharpen your skills in a low stress environment. So, for example, if you miss your trade in real time, you miss your trade. You can't rewind time and make the candles go back so you can see whether or not you get into the trade. With backtesting, you can sharpen your skills, take all the time you need to second guess, figure out whether or not something's really fitting up with your trading plan or your trading strategy, and just figure it out. Work through it. Take the hard time just to kind of buckle down and figure out why a strategy is working or not working. So it's great because there's no time limit. You can have the candles frozen there as long as you want them to be. And the last thing is, it helps you to understand your ideal stats. Trading is a numbers game. We don't have a crystal ball. We'll never have a 100% win rate. So the only way we can actually figure out, well, what our actual stats are going to be before we actually do it is to look at the backtesting data. We can see how many times in the past did the strategy work out, What is the win rate? What is the losing rate? What is the average TP, average stop loss, average risk to reward, average length of the trade, whether or not you're better at buying or selling on those trades. So you can get so much information from backtesting and recording your data well, which leads us to the next step. Now, there's a right way and a wrong way to backtest. The amount that you get out of your backtesting is how much effort you put in. So the first thing is try to make your backtesting sessions realistic as possible. The easiest way to do this is to use a platform called TradingView, which you'll see me use, and try to make sure that you're not cheating. You're not looking at the future price action and saying, oh, yeah, I knew this was going to go up. This makes sense. As soon as I see this doji, it's going to buy. Or as soon as I see this hammerhead, I'm going to sell it. Try to make sure that you can't see what's going on in the future, and you're realistically looking at the markets and trying to figure out, would I likely take a buy or a sell? Because the more realistic you make it, the better it will be when you get into the real live markets, which you're hopefully trying to do, get into the live markets and get the trade on the right side. The other thing is you want to take your time, do the quality work. I know that is, like I said, I know that is boring. I know it's not fun, but the more time you put into quality backtesting, properly making it more realistic, properly making sure you're adhering to your strategy, making sure you're testing the instruments you plan to trade on, using the right time frames you're planning to trade on. This is going to make it way more easier to execute in the live markets and gives you a better expectation of what to expect when you actually take your trading strategy live. And the final thing is record what you find. You did all this hard work. You spent all this time in your weekends to study and try to figure out the strategy is going to work. Now record what you found. So that way you don't have to keep doing this over and over again. You know that from one session that you did this, that these are the things you found out. Buying is better, selling is not. The trades typically take 30 minutes to 45 minutes to play out. I'm typically getting these trades best in London session versus a New York session. Show pictures of your ideal setups. So you can look at all the setups and say, okay, when I see this forming on the charts, this is when I'm going to execute my trades. Know what your normal risk to reward needs to be. Record all of that information because that is the reason we're doing this. We want to make sure that we're being effective with our time and making sure we're getting as good as quickly as possible. And that's it for these 3 slides. So now let's try to take this into actually backtesting. So I'm going to show you how I backtest personally. I'm old school. I tend to use an Excel sheet, and I just use good old TradingView. And so TradingView, if you buy the basic package, which I think is like $10, $15 a month, you can use the replay option. And this replay option allows you to go back in time, as you can see on my scale down here. This right here, I'm looking back at April's data and trying to see whether or not what happens when I test this new strategy. The strategy right now is irrelevant, but I'm going to just see how this works. I'm going to show you what good pack testing looks like. So what I'm going to do is, I already know the strategies in my mind. If you're interested in the strategy that I'm back testing, I'll drop a link in the description so you can go to the Telegram channel and see the content that trader is producing and showing and sharing his gems. So what I'm going to do is just take some of the pieces that I've learned from him, see if I can apply it in my own hands and see what that looks like, recording the data, recording what my trades look like, and showing what solid back testing looks like. So what I'm going to do is basically start with where we are time-wise, and just like I said, I usually have a checklist for what the strategy is, which I'm looking at on my other screen, but it doesn't matter. Like I said, this doesn't matter what the strategy is. It just matters that you do all the parts right. Right now, I'm using the replay for option, like I mentioned in the slides. I'm using the indicators that's going to be used for the strategy, and then I have a way for me to record my results, and I'll show you what that looks like. So let me go through some of this back testing. I may fast forward through this, but I'm just going to record this and go through the process. So let's get a few candles printed. All right, so we're starting to see some formations. Cool. And I'm going to try to apply this. So what I'm doing right here now is I'm anticipating and acting like this was a live market. And so this is right here based on the strategy that I'm testing right now. This is where I expect to execute a sell. And so what I'm going to do is screenshot this and drop this into my first trade. So that's before, so that I'm doing an honest assessment to see whether or not this actually plays out. What I'm also going to do is record the stop loss and take profit. So my entry price, I need that in. So entry price, this is my TP and my stop loss. And so as you can see, my Excel sheet is already showing me that I plan for this based on how I have this trade set up. I'm expecting to take a short, which is true. I'm expecting to sell. This was just an easy Excel conditional where basically I have in there if my value is negative, you add a 1, letting you know that I'm taking a short. Likewise, for my longs, if my difference between my open price and my TP is positive, then I'm taking a long. So I just use basic if ands, if statements for my Excel sheet so that I can actually do some of the math for me. And I might need to change this math a little bit just to, oh yeah. So I don't have any open price yet. So I don't have the closing price yet. So cool. Let's see. All right, so let's see whether or not this plays out. Boom. So we're in the trade. So this trade takes us in at, well, trading will let me get the exact minute. So I'll get this to the nearest 5 minutes. So I give this trade at 2050, which is basically 8:50 p.m. That's during Asia. So the open time is, let's see, this is April 24th. So let's do April 24th, 2023. And this is at 2050. Cool. And let's see what the closing price ends up being. what I forgot to do was, whoops, to put the next execution here. This is the one 2.5. Yeah. So we're going to copy this link. Same day. Let's see. This would have tapped us in 10:15 a.m. So right after this trade, we'll get another trade. 4, 5, and 15. So let's see what this trade would be. Entry price. Take profit. Stop loss. And so yes, this is already looking at. I'm looking about to take a long. And let's see if this plays out, right? That's what we care about. And we hit a stop loss. So let's see, what does hit stops? We hit it right here, 1410. 4, 5, 3. 3-hour trade, close price of our stop loss. And I forgot to put this times 10. How many times 100? So minus 37 pips so far. Let's look at this with a 15-minute. So markets were clearly dropping, but there was a reaction at entry, but holding TP without adjusting stops may be an issue with this strat. So I'm going to keep going based on how I know the creator of this strategy does things. All right, cool. So I'm seeing a break back above. So I would take another buy out of this liquidity zone. So let's do this again. Okay, so we can see that the first buy didn't go so well. Second one did, but we have a much lower risk to reward. So it looks like it might be better to get as close to the zone as possible. Because as you can see, if I drag this right here was a 2.3 compared to this being a 1.86, the original 1.86. But still, winning trade nonetheless. Looking pretty good, seeming pretty simple. So let's keep watching this. What we could do is just set a pending order that if it comes down here again, we have it right there, the liquidity zone. Might can go a little. Actually, yeah, we'll just do it at the liquidity zone. We'll keep the stops there, and let's keep aiming for that. And if it manages to get to the other side, we will take another short, and we'll take it to the midpoint. Ooh. So yeah, if we had set a pending here, it would have immediately spiked right through and hit stops right there. So let's record that because that was part of what we talked about. So that one never would have been activated. This one would have been activated at midnight on the 28th. Let's have this. And this would have been stopped out pretty immediately, but just 10 minutes later. And I forgot to take a picture of this beforehand, but I can just show the after in this case. That's set a pending in that case. Okay. Let's try to get a few more once I fill out these. Let's see. What does the calendar look like? So I just did from the 25th to 28th. Let's do the 29th, and that'll be a full week. And we'll stop there as this example. I don't want this video to run too long. Like I said, it's pretty boring. But this work helps out quite a bit. So I've already seen that I've gotten stopped out here. So what I'm going to do is go back to my higher time frames. It looks like the same zones are still there. So I'll keep going. Let's see where we go. So we're now in an unbalanced market. Yeah, we're in an unbalanced market now. So I will now erase these. And wait for a balanced looking market again. So it looks like we might not. That's the 28th. Okay, 28th is a Friday. Oh yeah, it is. So it looks like we missed that Monday. So we'll do one more day past that, and we'll count that as a pseudo week. So it's still running, still running, still running. All right, so now we're into this Monday. All right, so now we have a new zone. We have this one up here marked out, and the low was marked at 1,874,784. Where's the 784 one? 165,874. 165. Oh yeah, so it's basically that one. So I'm gonna remark out my new zones. Boop. Boop. we are going to mark out our liquidity zones. Like down to 15-minute. What time is this? Oh, it's May 1st. Yeah, so May 1st. And this is 8:45 a.m., which is past London. Great. So we are going to straight up put a pending right here. Boom. We're going to try to ride this all the way down to filling that liquidity void. Probably get the stops down a little bit tighter. That's a 1 to 10. This is kind of crazy. If this hits, this will be mad. So we'll zoom in. Let me get the info. Entry price. Be here. That zone's not quite right. Let's put it here. There we go. We'll fix this because it doesn't change things too much. That's what we want. And so this would have gotten us in, taken us in. And this time is 10:50 a.m. This is what I'm talking about, whereas there's no time limit and we can actually make sure we're getting this right. Because it's worth it, right? Oh, it stopped us out. Boom. Stopped us out at 1:05 a.m. the next day. So we do stop loss. 5, 2, 3, 5. And so even with the week, even with the week having 3 losing trades, those 2 winners leaves us up 80 pips for the day, for the week. So we take 5 trading days. Looks pretty good so far. I'm gonna keep testing this because I have an entire list to test this on. So I'm gonna go and do the same process through all of these different pairs and see which ones it works best on and figure a few things out. But hopefully this already gives you an idea. So it looks like, let's see, we took 3 shorts, 2 buys. We won 1 short, we won 1 buy. So it doesn't seem like it's biased or anything. The trades tend to take a long time. The ones that win take a long time to play out. The ones that lose pretty quickly, with the exception of this one. And you can see what good trades look like, what bad trades look like. It looks like I was forgetting to take some of these trades, take pictures of some of these trades. But I'll take a picture of this one that I just did. This was a short. I'm gonna do some 428. Let's see, where's the other one? Oh, there it is. Yep. So this is basically the process. You keep going through this and you just see if these things works. Figure out some things you notice and some things you don't. But with that, I'm heading out. Hopefully you've learned this. I'll have a sheet similar to this, a template similar to this in the description below. Let me know if you need any other information and if there's any other videos you want to see. Have a great one. Peace.